Hi everyone, I'm Greg Miniger, Senior VP at SIS-NW. Today I am joined by Doug Wilson and Bill Sablin. For today's webinar, the three of us will be presenting Bending the Financial Curve Towards Profitability. Many of you are experiencing unanticipated challenges in today's business environment. We want to share the insights that we've gained from our client relationships about trends with your peers and how they are dealing with some of the current issues that you are trying to address. First, a few admin items. Our presentation will be followed by Q&A. Please, if you have any questions throughout our webinar, please use our chat window. Our moderator, Liz Garnand, will facilitate the questions during our Q&A time. We'll be holding a drawing from those attendees that stay through the Q&A for a $150 gift card. Also, please know that we'll be sending you our slides with more details after our webinar so you can relax about taking copious notes. We suggest that you turn off your video for better webinar performance, but I'll leave that up to you. Your audio will be turned off. Specifically, our agenda will include forecasting and budget control. What's important? How to stretch IT corporate services dollars. Operational efficiencies, especially with remote workers. A little bit about us, and then the Q&A. Again, please use the chat box for any questions along the way. So let's begin, and we'll start off with some challenges most businesses face. Bill?
All right, thanks, Greg. As Greg mentioned, the impact to us all while navigating through this pandemic has been difficult. The 2020 challenge many businesses face, regardless of the type, is that your business may be open, and despite your best marketing and sales efforts, your 2020 revenues may be down. Now, even in a normal economic environment, we have found these are the three biggest challenges of running a business, and particularly smaller businesses. One is economic uncertainty. And this is even more pronounced now. Two is the cost of health insurance benefits. And you could really expand this to payroll in general, but rising benefits costs often feel out of the business owner's control. And number three is declining customer spending. All companies are going to face this at some point, but it can feel much bleaker when the decline is due to external forces. So if you can't control these items, what can you control? So cash is constantly flowing in and out of your business, and getting a handle on your cash flow is critical. We're here today talking about bending the curve toward profitability, but being profitable on paper ultimately won't matter if you don't have cash in the bank. Having a rolling 13-week cash flow forecast that is updated weekly will give you greater control and visibility. We use a 13-week look ahead because 13 weeks is 1/4 of the year. So being able to look that far ahead opens up more options for you to best manage your cash. Consider if you knew that you're going to be short $10,000 8 weeks from now. Could you come up with a plan to make up that shortfall? Maybe put off a big purchase or push a little harder on some overdue AR. But what if you found out that shortfall was coming tomorrow? Now your options are severely limited. But it's not just about knowing when cash is light. What if you knew you had a stable cash reserve on hand? You'd feel a lot more comfortable paying your bills early and taking advantage of available discounts. So now that you're properly managing your cash, it's time to turn your attention to your budget. Now, a budget is not something that restricts what you can do and tells you what you're allowed to spend. A budget represents your goals for the year, month by month. So why is budgeting important? It's the difference between hoping that things will work out and actually creating a plan for how it will work out. So if we say that your budget is your goal, that means you start with the profit you wish to obtain. Now, due to the nature of this year, that profit goal you had in January might not seem realistic anymore, but that's okay. Now's a great time to update your budget for the rest of the year. So you've got your profit goal, and then you estimate your revenue based on what you know now. The difference between your revenue and your profit becomes your expense budget. Once you've got your expense budget, you have to consider, is this still reasonable? And if it's not, and honestly, these days, there's a good chance it might not still be reasonable, Doug's going to have some helpful tips later on about where you might find some cuts to make. But don't just shove your budget in a drawer and forget about it. This is your plan for how your business will work out. So now you have to execute it. Consistently monitoring the budget and comparing it to actual results will provide more control over company finances. And control is even more crucial in these uncertain times. As both gross margins and margins of error shrink, the ability to react swiftly is critical. Remember, we said your budget is your goal. So a break-even budget represents the minimum amount your business must do to survive. So here are a couple of the key benefits of a break-even budget. First, a break-even model will tell you what aspects of your business are vital. It prioritizes functions within the company that will aid or hinder success. During unstable economic periods, your revenue often fluctuates, and frequent expense analysis and adjustments become necessary for survival. Second, a break-even model establishes accurate operating costs so you know where you stand and what it'll take from a revenue standpoint to simply break even. So you've got your cash flow forecast, your budget, and your break-even model in hand, but as we all know now more than ever, sometimes things happen that will force you to deviate from the plan. Next, there are some areas that need your attention to keep your budget in check with the forecasted revenue. We call those operational shifts. So the break-even model showed us the minimum revenue required to carry our operations. What you're looking at here are some areas to consider that could cause significant shifts to your operations. For example, that middle top icon represents supply chain breakdowns. You have to consider, what if your main manufacturer gets shut down due to a COVID outbreak? Or the bottom middle icon regarding reduced capacity. What if you aren't allowed to operate your warehouse at normal capacity? While your reports must assume certain conditions of your business, there are always factors out there that can disrupt your normal operations. And just like having a cash flow forecast can help you plan for cash shortages, there are things you can do to help you plan for these operational shifts as well. Right now, a lot of us can feel like we're staring off of a cliff, not knowing what is out there. Performing operational risk assessments can help you prepare for unexpected problems that might occur. An operational risk assessment starts with simply identifying risks to your business. We talked about some of those on the previous slide. And so once you've identified those risks, the next step is to analyze what the potential impact is to your business. The third step is to figure out what mitigating actions you can take for those risks that have significant impact. Obviously, if it's determined that the impact is minimal, then it wouldn't make sense to make major changes at preventing it. As a reminder, we're still talking about tools that help you to be profitable. Making sure that what you're doing is bringing you value is crucial to maintaining your profitability. Now, obviously, you can't stop with just determining what actions to take. You actually have to execute that plan. So the fourth step is implementing those solutions. And it doesn't stop there either. The final step is reviewing your risk assessments on a regular basis to ensure it still makes sense. If it doesn't make sense, you go back to step one and start again. It's the constant monitoring. Now, one of the most important aspects of being profitable is avoiding costly mistakes. And if those mistakes can't be avoided, you have to move as quickly as possible to minimize the impact. Being ready with a plan will save you valuable time. So on the previous slide, we talked about steps 2 and 3 being analyzing impact and determining mitigating actions. This slide is an example of matching up the impacts with the action. If the risk is something that brings a minimal impact to your business, then you should take action that has an immediate temporary relief. If the risk is something that brings a permanent impact, then you have to take action that provides a long-term solution. So as an example, consider the risk that you'll be operating at 50% revenue for the next 9 months. Doing an immediate action, like cutting non-customer related travel, might not really move the needle. But on the other hand, if the risk is just a temporary blip, taking an action like reducing headcount could end up causing more harm than good in the long run. So just to recap, you must know how the current economic environment and potential issues around the corner impact your business and create a plan to address it. Next, prepare, review, and update weekly cash flow forecasts and monthly budgets. Stay on top of it to reduce the uncertainty as much as possible. And if these things sound like an overwhelming undertaking or that you just don't have the time to do it, feel good about bringing in professional help. Financial visibility is necessary to manage your business and maximize profitability. And with that being said, let me pass it on to Doug, who can address some specific ways you can make a positive impact on your business.
Thanks, Bill. Good stuff. Good afternoon, everyone. My name is Doug Wilson, and I'm a consultant with 180 Partners. Thanks for including us in your day. We know you're busy. Many businesses are struggling, we know that. We really hope you find one or two ideas in the next 20 or 30 minutes that can help your company increase profitability. That's our goal. Most importantly, let me say, I certainly hope each of you and your respective families are doing well. All right, let's get right at it. Today, I'm going to talk about some concepts and approaches that will help your company increase profitability. Quick overview of 180 Partners. We're not selling you anything today or ever for that matter. We're a 10-year-old consulting group that helps guide clients to achieve a much improved position in back office technologies and workflows that has proven to deliver front office results. Specifically, technology and workflows such as your Xerox and telco contracts. Documents, paper or electronic, are the lifeblood of every organization. We work with both large organizations to small nonprofits. Pleased to partner with SIS Northwest and now CFO. I want to talk specifically about IT and bending those cost curves. There's been a seismic shift with the pandemic. What does IT need to look like to best align with the objectives, the new objectives of the business and moving forward? Where do you need to invest for maximum value? How can you be agile, responsive? Where and how can you cut IT and have a minimum impact to the organization? And know that cutting cost and saving money is one value proposition, but know that it is also possible to cut cost and cut costs significantly while also improving outcomes and improving outcomes substantially. That's a realistic objective to have. We do it all the time. Several discussion topics in this slide. I'm sure everyone is aware of the common tech trends on the left, use of Teams, SharePoint, Salesforce, and other communication and collaboration tools. Given the focus of maximizing cost savings during this period of reduced revenues, our clients are asking us to take a very close look at their non-revenue generating parts of their business, such as the back office technology and contracts. So on this slide, I want to focus your attention to the back office, whether it's traditional telecom, copy, print, mail, AP, AR, and various IT and facilities support. Why the back office? Because based on our analysis, it will yield tremendous ROI and a return on effort based upon the delta between the historical cost and technology footprint in place and today's dramatically different business needs as a result of the pandemic. Additionally, as a non-revenue generating department, particularly in reduced revenue period, you want to find every opportunity to reduce the cost of doing business. Also keep in mind, as a category of expense that serves the entire organization, the enterprise, it is also a workflow that can improve efficiency system-wide. Very important. It's a hub. In reviewing our engagements over the last year, and this is important, the savings to our clients has averaged $1,000 per every employee, not insignificant. Many clients, even at peak of business cycles, are looking for ways to improve cost and efficiencies in their back office systems. The scaling needs of your organization, whether up or down, will create significant opportunities for cost reductions or cost avoidance. Ultimately, the win for you is to identify a roadmap to ensure maximum value and organizational benefit for every dollar spent. Couple important points to share about contracts. Suppliers have gotten pretty creative about how to write a contract to protect their base and margins to the supplier's favor. One of the key points of Bill's presentation, as you may recall, was getting an accurate budget and realistic baseline on cash flow. That ties to back office technologies. It's important to get a complete understanding of current contracts and financial obligations and where you sit with them. It's not uncommon that a client is spending 2x or even 3x of what they thought based on all the typical pockets of expenses found in the back office in most organizations with different suppliers. Similar to Bill's presentation, the best decisions, and you know this, are always drawn from complete financial visibility. If you have a contract that's underutilized or if you are over budget in any of your line items, know you have some options. If you have any questions on your situation or your unique contracts, feel free to shoot me a quick email and we can have some additional ideas to consider as you review. Let me give you a couple specific takeaways for your benefit. Be aware that your contracts will likely have an auto renewal. Without any notice from you, they'll auto renew for another 12 months typically. They usually require a 90-day notification, and those will likely come with an escalation. So be thoughtful on your current contracts. This is a big one right now. As companies are striving for cash and protecting cash, we're seeing a lot of businesses considering buying out current long-term leases in hopes of achieving some monthly cost savings. Understandable. Nominal short-term savings gain from renegotiating existing leases could also include, however, unfavorable longer-term implications. And again, we can help you with some other things to think about as you're looking for ways to reduce cost. Shoot me a quick email if you want to chat further. Let's talk about your sourcing strategies next. When you look at how to source, particularly now, it is definitely not business as usual. Be thinking a bit more strategically. 3 points on this slide. I want to take you back to the last point on Bill's summary slide. First, if finances are not your expertise, hire a financial expert. The parallel to that statement overlays my presentation and this slide of strategic sourcing of back office technologies as outlined at the top. It's important to consider whether your organization has the time, interest, and expertise and priority to properly evaluate the optimum technology in those hubs and within that footprint, supporting back office and the scaling needs of your business. If you have the time and expertise to take a closer look at your back office technologies, it'd be important to review it. Likely, as mentioned, you're spending 2x of what you originally thought. And of course, as mentioned, those programs serve the enterprise. So any improvements will help drive organizational efficiencies. If you don't have the time or expertise, know that there are other options available. Second point, as another example of strategic sourcing, it's about being able to source things less expensively. Going back to that nonprofit client we secured this year, they were spending significant monies each month on a very expensive, relatively high-end color printer. The printer largely intended to support printed materials for their annual gala and other fundraising events. A gala, unfortunately, as you may recall, that they weren't able to have this year because of the pandemic. The point to strategic sourcing is that there's a print shop in every corner, and perhaps a better approach to some applications is to outsource those projects on a more pay-as-you-need basis. Identifying where that break-even point is on insourcing and outsourcing and identifying the sweet spot of cost and efficiency all plays into strategic sourcing. There's always a better decision out there when you focus on bottom line results. Change management, as you know, is always an important topic. Identifying priorities and core expertise is always key to how you spend the time today and tomorrow and the next day to deliver the best results for your firm. Lastly, think about this. Every copier or printer acquired, however benign and inexpensive, only keeps perpetuating a paper-based workflow and legacy costs and likely manual processes. This is one of the reasons why we've partnered with SIS Northwest on this seminar, helping clients find a more efficient way of supporting their business, and particularly with the work-from-home model and supporting remote workers with a digital mailroom operation. Summary. Like the picture on the right, you can increase quality, you can increase efficiency, and you can increase speed while reducing cost. It's a matter of expertise, time, and what to look for. We know that data and financial transparency always drives better decisions. A bit of a rhetorical statement, certainly. Many industry experts have reported that print and print-related ancillary costs has been one of the most unaudited areas of expense in corporate America. When you think about your current technology footprint supporting back office workflows, print and telco, particularly in the work from home model, what would your scorecard look like? What part of your technology plan is expensive and underutilized? How are the bottlenecks impacting your front office results? Just keep in mind that you can find cost efficiencies. They are there. We see it all the time. Let me know if I can help you and your organization in any way. Now let me pass things along to Greg.
All right, thanks, Doug and Bill. With the impact from the pandemic, we all know business operations have changed, including with remote workers. I want to address some additional ideas on what can be improved to increase efficiencies and profitability. I also want to give you some ideas that are in addition to what Doug and Bill have addressed. In my role at SIS-NW, an outsourcing services company for many organizations, I work with a lot of businesses, and I see everything from ninja-level efficiency to wondering how does a business get anything done. Now that most businesses are supporting more remote workers, there are new issues. Some companies have seen some productivity improvements, but some have real areas of concern too. Working from home can be effective, but I have seen some challenges since the pandemic forced many workers out of the office, especially around administrative tasks. These are tasks like depositing checks, processing invoices, client correspondence, and other transactional documents, especially when there are multiple people involved. But let me step back. Here are some example administrative tasks that are common across offices. These have been happening even before employees started to work remotely. I bring up these issues because they cost your business money and create inefficiencies. I won't read them all, but you get the point. I will highlight the last issue, compliance. Compliance issues can especially happen when people work from home and are sending confidential information through non-secure connections, or simply having confidential information in a non-secure home environment. You don't want your client's confidential information sitting out on the kitchen table. So before I tell you how to avoid these issues, let me talk about a costly area for a business, the mailroom. Why is it costly? Because it has so many steps to complete tasks and places where mistakes can happen, slowing down the work. So let's look at your incoming mail, and by the way, this includes email and faxes. For this example, we'll talk about something that all businesses deal with, invoices. First, the mail needs to be opened, sorted, prepped, and perhaps scanned if it's paper. And then someone has to enter data into your accounting software about the invoice and code costs to appropriate departments. Then mail gets routed, all done manually, usually through emails. And then someone reviews and approves the invoices if necessary. It gets returned after approval to the originator, and then it gets fulfilled and payment is submitted. Then you have the issue of storing the documents for legal reasons and being able to find them if needed for audits or other purposes. When this is done manually, you're open to delays, lack of visibility into process and workflow, and mistakes. When you break down the process in this way, it's easier to see why mail takes up a lot of time, which is a labor cost. Not only for admin people, but impacting business operations and management. So you may be wondering, okay, so it takes time, but is that really an issue? It is an issue because 100% of offices make these types of mistakes. Set aside the remote worker for a moment. I often tell people that even when people are working from just one office, 100% of accounting offices make mistakes somewhere. I see the impacts of mistakes all of the time. Mistakes can be data entered incorrectly or information shared with the wrong person or documents misfiled. Reducing mistakes is important, and they usually happen due to lack of process control, wasting costly labor time. When processes aren't in place to prevent mistakes, it leads to rework, which is expensive and can result in lost revenue or upset customers. The amount of time and effort required to find a mistake can easily cost hundreds of dollars for every mistake. So getting the task done accurately the first time drives costs down. Now, with more people working remotely, mistakes could happen even more. It's not about whether you can trust your employees or not. Again, it's more about the lack of process control. So here are some tips you can immediately do in-house to avoid mistakes and reduce costs. You can put better practices in place. Start by separating duties. It's never a good idea or a good practice to have one person manage both receivables and payables. Not only do you open yourself up for potential embezzlement, but there's no quality control. The second is validation of tasks. It's a best practice to have a second person validate each step. Did the data in the invoice get entered correctly? Coded to the right GL account? Is the payment due date right? Here's an example. When you're reading an email, are you more likely to see a mistake someone else made or one that you made? The third one is to train staff to avoid multitasking. Studies show that you lose about 40% of your productivity when you do. We think we can multitask, but our brains are not set up to do that. We slow down as we think of one task and move to the next. And fourth, take into consideration any confidentiality issues like HIPAA, especially if employees process documents from home. Are your documents secure? And last, don't underestimate your costs. Did you know that just processing one invoice costs between $4 to $23? Most offices with manual processes trend towards the high end of that scale. As an alternative, consider outsourcing for repetitive tasks and pay for services as you go. SIS&W is an outsourcing service provider, but you of course have many options. Outsourcing can eliminate substantial operational costs and at the same time improve quality and efficiencies. So let me share some technology used for repetitive tasks. You could acquire this technology, but a good outsourcing partner has already made the capital and knowledge investments required to obtain these capabilities. We've come a long way from the old ways of doing things pictured on the left. Today, a lot of things that used to be done manually can be automated. Here are examples used to reduce costs and mistakes resulting from repetitive administrative tasks. First, optical character recognition technology can eliminate approximately 90% of manual data entry, and double-blind human validation results in greater than 99% accuracy. Second, AI can automatically sort documents based on their characteristics and direct the OCR engine to capture data from those documents. And last, automated workflows ensure that information gets to where it needs to go and provides management dashboards to monitor productivity as well as identify stuck processes. So that's it for my presentation. I want to leave you with 3 immediate takeaways from this webinar. 1, look for where you may have mistakes. You may notice it in data entry errors or in dropping the task between people. That's where you have hidden costs. 2, consider where you might have confidentiality issues in this new environment, especially with remote workers. Find out where your vulnerability spots could be. And the third point is a general tip, a summary from the 3 of us. Proactively restructure for better cost savings. Whether it's figuring out how to right-size your operations to your revenue, then streamlining manual repetitive tasks, looking at your corporate service contracts, or creating the supporting structure needed for the remote worker. It's not too late to have impact to reduce your costs for this year. And if you use outside experts like us, know that we are all about reducing your bottom line costs quickly for you. It can be done. So be proactive because we believe it is critical for your business. There's no telling when we'll return to normal. So we'd like to open up for questions, but before we do, we'll give you some brief information on our respective companies. SIS&W has 2 offices, one in the Montgomery Park building in Portland, and our other one is located in West Seattle. We're experts at creating reliable processes for automating daily tasks like mailroom and accounts payable, incoming payments, or confidential records like medical or HR files, patient registration, and much more. Our project management approach to outsourced services offers unmatched quality and accuracy. And we partner with best-in-class partners and technology. We can often save you 50% of your costs for repetitive tasks and help mitigate mistakes. So that's a bit about us. Doug, please tell us about 180 Partners. Doug?
Sorry.
All right, Doug might have had to step. Oh, okay.
Yeah, there we are. Sorry about that. I'll abbreviate it given that I was on mute. We're impartial, unbiased. We're deeply experienced, decades in the industry, help guide our clients to the best possible outcome. And we work on a contingency fee basis aligned to a successful client outcome. Thanks for your time today.
All right, Bill. Yeah.
His face.
So you were muted for a second.
Oh, okay. Sorry, I'll start over. Simply put, now CFO solves the accounting and finance problems all businesses face. We've worked with thousands of businesses and understand the pressures of owning a business and what keeps you up at night. Our team of consultants, from seasoned CFOs to knowledgeable staff accountants, take care of accounting and finance so you can work on your business, not in it. You know, besides the items discussed here, like cash flow forecasts and budgets, we also do everything from the day-to-day execution of accounting, like processing payroll or reconciling your bank accounts, to the strategic work of financial modeling and raising capital. But with whatever the task is, we constantly strive to give you better financial visibility so you can make smarter business decisions and gain better control of your business's finances and its future. And with that, I'll turn it back over to you, Craig.
All right, thanks, Doug and Bill. Now we have some time for questions. I'll ask Liz, who is online, to pass on to us some questions that you may have.